we're talking about impulse waves. Basically, impulse waves correction, but mainly the impulse wave. We need to know how to identify them and how to use them to our advantage. So, for you to know when an impulse is starting, or you just need to understand the market structure. You need to know your trend, and you need to understand the market structure. You need to understand when a trend is starting. Depending on what time frame you are trading, depending on how your trading style is, you just need to understand when an impulse is being created and when a correction is being created. Right now, we're going to use the 1 hour time frame of Euro USD. We're going to use price from where this year opened. This is the beginning of the year. That's why it's January. This should be the beginning of the year. January. See, that one same. Yeah, this should be the beginning. So we're going to identify our low and our high. We need to know the low and the high of the impulse, because that's what tells us when an impulse or when a correction is valid or not valid. It's what tells us where we are in the market at that very moment. So right now, we've identified our low and our high, and we're watching, let's say we're watching price create this correction. So price made a low right here and did not continue going down, and it came all the way up. For price to validate this impulse, price has to break the high of the previous impulse. If price does not break the high of the previous impulse and continues consolidating or ranging in this area right here, or in the area of impulse 1, then we are still correcting. There is nothing happening, there is no impulse, we are correcting. That whole movement would be a correction. But price went up and it came down, and then it made a low, it made a new low. Price has to make a new low for a new impulse to be created, and we have a new impulse all the way here. So someone who would have managed to catch this low, you can use your fibs, you can use candlestick confirmations, you can use zone or support confirmation. As you can see, there is a support right here, and price came all the way down, rejected that support. This area right here is a support. You can see how price reacted the same way in the same situation. See how price did a small range right here, price came all the way down, did a range right here, and then it went up. Price went up, came down, retested the range, went up, came down, retested the range. If price had traded in this range, then we could have noticed price going maybe somewhere to this low, but it did not, which tells us that price is pushing for the next impulse. So we saw price come all the way to the high of our previous impulse, and it eventually broke out. So this would have validated or would have confirmed your impulse 3. If price had not broken here and it continued going all the way down and even broke the low of our impulse, then the trend has changed. We are no longer counting our impulses for the uptrend. We're now counting our impulses for a downtrend. We're now looking for selling setups. It's no longer buying. But right now, you might have been able to enter around this year when price kept on retesting. That would have given you signals, signals that you should be looking for buys. And then price broke here. This would have given you another entry when price came to retest right here. When price closed above again, that should have given you another entry. So price, you have to close above. It has to break and close above for you to validate what's happening. So price made an impulse, it made a correction, it made an impulse, it made a correction. So now this is our wave. This is our correction. For if you put your trend line here, you should have something that's showing you a trend. You see, if you use trend lines, this would be your trend line. See how price went up, created a new low, made the next impulse, came to create a new low, and made another impulse or another attempt of an impulse. But price did not break the high of our previous, or our now previous impulse. It did not break the high. Price actually came all the way down and broke the low. of our previous correction. This should tell us that price is no longer trending up. The trend has changed. I'm no longer looking for impulse 5. I'm already counting impulse 1 for a downtrend. So this is no longer in work. The trend line, the uptrend is no longer in work. Now we're looking at a downtrend. So you all know you have to continuously update your charts. Always update your zones. Do not keep unnecessary zones on your chart. If you were trading right now, this zone right here isn't as valid to me right now. It's not. However, this zone is now valid. That's our valid zone, and this zone is also valid. So when I see price rejecting around here and it comes back all the way down and then it breaks the previous low of correction 4, that means now we have to count impulse 1 for a downtrend. So when we're looking for an impulse, or when we're looking to see where we are right now and what we can expect next, or what we can anticipate next, I'm gonna put my high, it's right here, and my low of impulse 1 right here. That's my low of impulse 1. The question is, why didn't I put this as my low for impulse 1? Most people would ask this question. Why didn't I put this as a low for impulse 1? See, the thing is, this could have been the high and this could have been the low of our impulse 1. It really could have been. However, price consolidated right here and it made a small drop, and then it went up to the high of what would have been your 2. However, the thing is, if I was to put a trend line, if you were plotting your trend line would look like this. This is a valid trend line. This would help you figure out your impulses. You can't have a trend line like this. This is not valid because price is sticking out right here. You use the wick, you do not use the candles. Your trend lines or even your zones cannot be cutting through candlesticks. It cannot. You do not see my zones like this. My zones are not like this. My zones are like this. Your zones have to be on the wicks. So if you did use trend lines, or if you needed trend lines to assist you, then you would have a trend line like this. This is what price is giving me so far. Right? So right now we have impulse 1. So this is one thing that you have to understand. We have 1, 2, 3 waves and 1, 2, 3, 4, 5 waves. If you know your Elliott waves, we have 1, 2, 3 wave and we have the 1, 2, 3, 4, 5 wave. So since 1, 2, 3 is less than 1, 2, 3, 5, inside a 1, 2, 3 wave, there's actually another 1, 2, 3 wave. Inside every wave, there is a wave. So inside impulse 1, there is a wave, or there's a 1, 2, 3 wave in there. There can even be a 1, 2, 3, 4, 5 wave inside an impulse 1. So that's why we didn't make this the high and this the low. We made this the low. So that means 1, 2, 3. This was the high of 2. This was the high of 2, and this becomes the low of our impulse 1. So now this becomes impulse 1, and this becomes correction 2, and with impulse 3. It can only be a correction when price comes and hits this area. That's when it's a correction. So right now, if price doesn't continue going down and it gives us more bullish signs, I would expect price to at least reach around this area anywhere around this area to give us correction for. But if price comes all the way up and breaks our trend line or breaks the high of correction 2, then price is in an uptrend. So price has to come all the way up, break this high, and then price is in an uptrend. But right now it's 1, 2, 3. So right now we have 3. So if you are trading Euro USD right now, if price doesn't give you bearish signs right now, expect price to make a bull move and then another impulse. Now this is what we have right now. This is 1, 2, 3. Remember, nothing comes like what you see in the textbooks, but this is how price is it right now. We used our trend line to validate where the high of correction 2 goes. There's always a lot of ways to confirm your analysis. I could have easily simply told you that this is impulse 1, 2, and 3, but that's not how it works, because price gave us this high and this high aligns with our trend. This is an invalid trend line. Some people would use this trend line, but this trend line is invalid. This trend line, if someone was trading it, right, they would wait for price to break. Maybe their TP would be here, or maybe they'll be expecting price to continue going up. But however, if price was to get around here or even to this resistance, price would not continue going up, it would be rejected. In this case, someone was looking to continue buying. That's how people lose money. It's that simple. So this trend line validated the impulses. So the reason why impulse 3 on this downtrend looks a little bit too exaggerated is because of the impulses in another impulses, a wave within another wave. There's always something smaller with minutes, with seconds, with hours. That's how it goes. So we had the base of wave 1, of impulse 1 right here, wave 1. This is the low. So price made a correction and created number 2, a correction 2 right here. And then impulse 3 was validated when price broke this low. This is where impulse 3 was validated. When price broke this low, see, price came all the way down, breaking this low, and then it came all the way up. It retested the low that it broke, and then it continued down. So if you were trading, if you wanted to trade wave 3 or impulse 3, you would have watched price break, come all the way up, sell here, because that's the retest. See, it gave you a bullish candle, it gave you a bearish candle. And if you're seeing bearish candles on a resistance or now resistance, that means price is going to continue down. It gave you a bearish candle, the signal. It gave you a core confirmation. This would be a second confirmation. When price broke this low, this would have been another confirmation. So you would have had 2 opportunities to sell. So price came down. It even came back up to retest that break. That's another opportunity for you to enter. So that means we have, so inside impulse 3, this is what we have. This is inside impulse 3. This is not a new impulse. This is inside impulse 3. So we have 1, 2, 3, 4, 5. I don't know if you guys can see that. So we have 1, 2, 3, 4, 5. That's how our three-wave pattern is right now. This is why it's a good thing to be looking for a correction. You are looking for price, you are looking for trade, or you're expecting, or not expecting but anticipating price to give us something that will come up to here. That's what you'll be anticipating right now at this moment. I'm not saying that's what's going to happen, but if it does happen, that's great. If it doesn't, price has to break this low and make another low. Either way, on the higher time frames, price has to go back to our trend line to give us a correction, giving us the next impulse. No matter how long it takes, price will still give you the same picture in the end. So price could continue down, but it still has to come back to our trend line to tell us what's happening, to tell us if the trend is changing, or to tell us that the trend is continuing on the bigger time frames. That's what is happening right now. So as long as you know what impulse or what correction price is it right now, you know what to anticipate, and you just have to wait. It's all about waiting. The best thing about waiting is you can set limits. Limits help. You can set your limits so that you don't have to continuously just look at the markets. Just set your limits or set your stops and you're good to go. So the things that you need to remember on impulse is understand the high and the low. Understand that if the high is broken, or if the high is broken in an uptrend, that validates your next impulse. If the low is broken on a downtrend, that validates the next impulse. If the high or if the low doesn't get broken, whatever is happening in between is a correction. It does not matter how long it takes, it's all a correction. Just figure out the low of that correction, and there you have your new low, or you have your new high. So the high has to be broken if you're in an uptrend for the next impulse to happen. The low has to be broken in a downtrend for the next impulse to happen. If the low of the impulse in an uptrend is broken, that invalidates our setup, that invalidates the trend. If the high of the impulse in a downtrend is broken, that invalidates the setup, the trend is changed. The moment price closes above, it might be 2-3 pips. As long as it's above or below, it might be 10 pips only. As long as it's above or below, the high is already been changed. It doesn't matter how many pips it is, it happened. That's what you need to understand. Yeah, that's all for today, guys. I hope you guys understand, and if you have any questions, please feel free to ask me.